in the huge foreign debt we owe, the largest in the history of the world. The discord in the world financial system is telling us that it's time for us to pay for our profligate spending and massive foreign indebtedness. We have lived as a nation far beyond our means, and the message is, for the foreseeable future, that we will be forced to live beneath our means as this debt is paid. The inflation optimists are excited about current signs of economic growth and have even announced the end of the recession. It is conceivable that a reprieve can be achieved and the penalty that our economy must endure delayed. A reprieve must not be confused with a pardon. One is temporary delay, the other an exemption. The payback for our excesses is certain to come. Massively increasing debt and monetary inflation can slow the crash and change some government statistics, encouraging the optimists. But real job growth and a return of prosperity will remain elusive. The odds of us once again becoming an exporter of manufactured goods like steel, car, and textiles are remote. Ironically, a reprieve may well restore some confidence and motivate some spending and investment. But instead of restoring long-term growth, it may well act perversely by precipitating price inflation and higher interest rates. Since today's interest rates are artificially set, much of our investing is unproductively misdirected. Current enthusiasm in the stock market is once again a reflection of the message that low interest rates send. Thus, too, the government stimulus package has helped to sustain the bond bubble, which in time must be deflated in order to get back to sound economic growth. All of this activity poses a threat to the dollar. Governments are very powerful, and when in partnership with the monetary authorities that can inflate the currency at will, big government thrives. Welfare demands and senseless wars can be financed for long periods of time through inflation, as long as trust in the currency lasts. Trust, though, ultimately controlled by facts, can be misleading, since currency values can gain benefit from a country that has a strong military and wealth and a reasonably healthy economy. Eventually, markets and reality overwhelm, and illusions about a currency's worth becomes a reality. Today, reality is setting in, and the first of three major events has begun. The worldwide financial system, built on a foundation of paper, has received the shockwaves of an impending collapse. The wild speculation in the derivatives market, the stock market bubble, the insurmountable debt, public and private, and the massive malinvestments have been shattered. The only solution so far offered, but led to be lied by the United States, has been to print more money faster, keep interest rates low at practically 0%, and remove all stops for controlling deficits. These are the very policies that cause the disequilibrium, and doing more of the same, but only faster, can hardly help our economy. The addiction to easy credit and deficit defies a wise political solution. Politicians are incapable of delivering the message of frugality, common sense, and sound money. We can expect that the course we are on to continue and accelerate, since the first event, the collapse of the financial system, is still in its early stage. The housing crisis is far from over. The commercial property crisis has not yet gotten much attention, and the financial obligations of the government are growing exponentially. And none of this forces the slightest pause in the expanding of welfare growth. The number of regulations, which are indeed a tax, are exploding through the market, was already suffering from regulatory excesses. There's a consensus in Washington that wise regulations can compensate for all the mistakes made by the Federal Reserve, the executive branch, and the Congress. This fallacy has been around a long time and will be difficult to overcome. The pessimism of the middle class continues to get worse despite the prognostications of Wall Street and the administration. Most Americans know that the standard of living and real wages have not gone up for the past 10 years. If you're not a shrewd stock trader, instead invested in stocks 10 years ago and held on, in real terms, you have lost 20% of your savings. The middle class is poorer also because house prices have crashed and many have lost their homes. On top of this, all we hear about is the trillions of dollars of debt and entitlement obligations that have been racked up for future taxpayers to pay. When it is revealed that the insider friends of the Fed and Congress get billions of dollars in bailout at the expense of the middle class, it's no wonder the people are taking to the streets and directing their hostilities toward both Republicans and Democrats in Washington. Many would agree it's well-earned anger and properly directed. This anger and frustration will certainly grow as the consequences of the collapse of the financial system becomes more severe. The concerted effort to prevent the correction the market demands guarantees a prolonged, agonizing crisis. Every effort to reverse the tide will depend on spending, higher deficit, increased taxes, and money creation. This effort is now providing another grand bubble, the dollar/bond bubble. The next event will be a dollar crisis. A full-blown dollar crisis will be much worse than our current financial crisis. The extent of a dollar crisis depends on whether or not the Washington politicians wake up and change their ways. A dubious hope. More likely, the insanity will continue until some not yet known event will undermine the confidence in the dollar worldwide. Signs of less desire for foreigners to hold our dollars are already present. I'm certain our Treasury and Federal Reserve are pulling out all stops to prevent a massive run on the dollar. At present, the orderly retreat from the dollar is working, but it won't last. China is quite active investing in national resources around the world and including in Iran. While we live in the dark ages and believe only our military presence and military threats can protect our access to oil, China is actually spending some of their savings investing in their future access to energy and other precious metals and minerals. But the orderly retreat from the dollar won't last forever. Since 1973, shortly after the breakdown of the Bretton Woods Agreement, the dollar has lost 32% of its value against a Federal Reserve basket of currencies. But that doesn't tell the real story, since that is a measurement against all other currencies, and they are all fiat currencies as well. This gave the dollar an artificial benefit from its position of power in great wealth in military prowess. The dollar in relationship to gold, however, is down 97% since 1971 and 82% as measured by the Consumer Price Index. The dollar, mismanaged by the Fed, has not been a benefit to the savers who sought to responsibly take care of themselves. They've been cheated by a rotten system and are just beginning to understand exactly how the Federal Reserve has been responsible for the swindle.